All right. Good morning, everybody. It certainly does not feel like a Friday. Probably because it's not. But last week it seemed like every day would felt like a Friday. A little bit of homework. You know what? Just a shameless plug, right? The Bullish Bears website. I know it's gone through a lot of changes and things that were easy to find, maybe not so easy to find now, or you got to kind of hunt around a little bit. You know, I'm like against change. I don't like say, like the furniture in the living room getting moved around drives me crazy. Just put it somewhere, leave it alone, never move it again ever. So, when it comes to something like the website, when I have to go hunting for something that I knew where it was and now I don't, that it just kind of messes with my head. But the changes that we've been seeing in here are just so awesome. You can search the blog now with a push of a button. I love that. Man, I love that. That makes things so much easier. And we have years of content in our blogs. What we've done over the years is every time a new trader comes in and asks a question and we don't have material on that, we make material on that, right? So you can imagine if you're new to trading, a lot of the questions that you have are probably covered in that blog. All you have to do is search it, right? And it's keyword accessible. So you can just go in and search it like crazy. And the next level library, maybe it's because I built 90% of it that I'm really enamored with it. But I made this stuff, and I didn't make it on the idea of, oh, gee, let's just go out and explain what a call and a put is. There's so many videos out there. This is a call, this is a put, this is a body, and this is the wick. God, come on. I wanted to make content that really helped people understand what an option trade is and then how to put it on, right? At the money verticals, Greek neutral verticals, out of the money spreads, income trades, very specific things like trend line breakovers in 0 days, putting on exacting hedges so you knew how much of your portfolio was going to be protected and being able to stay short all year. That way, if the market does crash, you're already covered, right? It's insurance. And yet, insurance shouldn't be so costly that, you got a column of loss at the end of the year that is just out of control. The material in here on the options side of things is just absolutely phenomenal. And you may be able to get on your own to a point where you're really good at options if you struggle and grind and you never came over and looked at this stuff. But why would you struggle and grind for years when you can really shortcut through the system and get advanced very fast? It just comes from having access to the material. This IV school, there's 20 videos in there, and the first 10 are really they're boring. Oh my god, they're so boring. But it's because it's the nerd side of volatility that we really need to have before we start using it in our trading. So the first 10 are really boring, but the second 10 show you how to apply that in actual trading environments and a lot of background behind it. The advanced strategies, we're talking, you know, understanding a particular pattern and saying, okay, that's my signal, that's the trade. This is what strikes I need, what expiration, how long I'm going to hold it, how am I going to manage it. And this is the kind of material that would answer a lot of the questions that I see in the chat all the time. All right, I got the shameless plug out of the way. We're going to add a little bit to the morning briefing, and it's this little review of the dollar. I mentioned it the other day. I come here every day and look at it. I may as well do it while I'm on the live stream. So we finally had a little bit of a pullback in the dollar. We do have the FOMC minutes coming out today. Now, it's important to understand it's not the FOMC meeting that we had before, right? On that day, they met, chipped teeth, discussed things behind closed doors, and all of that was recorded by stenography. Well, the minutes of that meeting are going to be published today. For the most part, he already came out and told us what they talked about, but he didn't cover every minute little detail, right? He had uh, his media gathering after their meeting, and then he gave his announcements. Well, today the minutes from that meeting are coming out, so it's not necessarily new information, right? It's more information on the existing material that was already talked about. Normally, you would expect, since he already hit the highlights, that there's not going to be anything really new, right? Except, well, I mean, I think he's already shown that we can't trust him, right? He stood up there and talked about how it was inappropriate for those other Fed members to be trading uh, during the coronavirus and when they were making policy and they were doing deals with BlackRock and wink, wink, nod. And he sat up there and condemned their actions while at the same time he was doing the same thing and it just hadn't been caught yet. So today we're going to get the meeting minutes. Maybe it will cover something that he didn't already mention. Maybe he was just deliberately obfuscating, right? So for today, 8:15, 9:45, 10:30, and at 2 o'clock. There are a couple others, but those will be for other nations, not us today. The 10:30 report, just like last week, I do believe it's worth keeping an eye on. Energy is kind of the forgotten redheaded stepchild, right? Everybody in the last 10 years or so has kind of dismissed energy because it no longer has the influence that it once had. But make no mistake, it may lack its former glory, but it still has impact in our market, right? So you definitely want to know when the report comes out. Now, a lot of times it comes out, USO makes a little bit of a move, but the rest of the market doesn't. Everybody shrugs and things move on. But the report's coming out at 10:30. There could be some violence or volatility from it. And if you're not yet in a trade and you're just about ready to get in, maybe we're coming up against support or resistance. You're thinking, yeah, there's my shot. Maybe I'll wait for the petroleum report to come out. Right? It's as simple as that. No problem. So the release of the meeting minutes, Friday's payroll numbers are a big deal. So we're kind of back in that wait and see again. The sharp move in the treasuries and that rout in tech shares is kind of keeping a lid down on any kind of exuberance. I took this screenshot from Bloomberg's 5 things you need to know. Nothing too big, right? Autos are kind of doing good. That was another thing they mentioned. At this point, any pivots that were in here that had any value or validity are gone, right? They're just gone. We've wiped them out. The more times you test and retest a level uh, or a pivot, the more that pivot loses its validity. Unlike a support line, right? There's always that old phrase, the more times you test support, the more valid that support is. I don't think so. Right? It depends on why it's supporting the market. If there's a lot of contracts down there, a lot of liquidity, every time we bump through that liquidity, we're eroding that support until it's just not there anymore. Same thing with resistance. I've heard it said, oh, well, the more times we hit resistance, the more valid that resistance is. No, I don't think so. right? There's a lot of liquidity up there. It's what is causing that ceiling or that resistance. The more times we interact with that liquidity, the more likely it is that we are eroding that liquidity until there's nothing left. And as long as the push is still there, we're going to go through it. One thing that would be worth keeping track of is the volume profiles. Since we are stacked side by side by side by side like this, value area high and value area low and point of control are now basically centered at high, low, and mid, right through the middle of this thing. We have the range. You can see how just absolutely clear that is, right? We could just sit here and draw boxes all day. The size of the moves in the last few days has been really chewing people up. I've seen a lot of people yesterday talking about, well, they were able to get some wins, but they had to use stops that were so wide, it was just almost nasty, right? It was at a level that makes you wonder, like, is it even worth it? For me, the answer is no. It's totally not worth it. The easiest way to identify if you're in a market environment that may perhaps be too violent or dangerous, just go to a 1 minute chart. Now, I remember when I was new, and everybody told me, "Oh, man, don't no, yeah, don't never go to the 1 minute chart. Don't look at patterns there. Don't look at signals there. Don't trade there. Stay away from it." And they really gave me a bias that was unfounded. There's a lot of validity to going to a 1 minute chart. And one of the greatest things about going to a 1 minute is that you can see the size of a 1 minute candle and you can see the size of 1 minute volume. It is one of the clearest pictures of volume and price that you could ever find, right? Because it's not blurred into four other minutes, like when you're on a 5 minute chart. If you go to a 1 minute chart and you see candle sizes that are way beyond your stop size, then you know that each candle has the random push or walk to run you over, right? How far away do you have to get? Now, if you're good with flow and you're using something like Jigsaw or Bookmap or something like that, to where you're not just going long at the right time, right? You're not going up when the market's going up, or you're not going down when the market's going down. Not just that, but also timing it so that you get in with the flow. The analogy I always use is double Dutch jump rope. For those of you with kids, you may know, and for those with you who don't have kids, you have no idea what I'm talking about. It's when two people are standing facing each other about 10 feet apart and they're swinging the rope, and then you've got to time your entry and jump in there and jump rope while they're swinging it. If you don't time that right, you're going to land flat on your face. It's kind of like trading. You can take a short entry and be right about your bias and right about your direction. But if you don't time that entry with flow, it's just going to wick you out and then run away without you. So the only thing you can do at that point is to get good at flow or to use a wider stop. Yesterday would have been one of those days where you really needed a wider stop. I came back in the afternoon when things calmed down a little bit. We had that really beautiful inverse head and shoulders right here. And then we had that 50 line cross. So yeah, I mean, I took that, and I did it on the ES too because the Nasdaq yesterday was just a little too violent for me. So the 1 minute offers a lot of validity. I was taught to watch the volume of a 1 minute. IBD talks about oh damn volume. It's always interesting, when they're like, you need to see excessive volume. What does excessive volume look like? It looks like, oh damn, that's some volume, right? It shouldn't be subtle. It shouldn't be soft. If you're looking for breakout volume, it should stand out. And you know what? On a 1 minute chart, it does. And then there's warning size. If you see 10,000 contracts in the ES in 1 minute, that's a warning, right? That's a heads up. That's like, oh man, watch out, right? You can't see that on a 5 minute chart. It blurs right in. It just mingles. It's worthless. So for today, what are we going to do with? Well, for today, we're in the box. We've got all of our moving averages tangled up. We have not yet achieved that double bottom. We're not at the top of the range and we're not at the bottom of the range. We're in the middle of nowhere. So you may decide that sitting out would be probably a good idea, right? There's nothing wrong with trading in the middle. There's a lot of money to be made trading in the middle, but you may find it a little bit difficult. And, defense and preservation of capital should be very high up on your list. So if you find it that it doesn't look good, if your instincts are that this may be a little more difficult than you're willing to contend with, be fair about it and just step back and set alerts. Use those alerts for extremes. That way, if we happen to do like we did yesterday and get that really nice V bottom, then you've got an opportunity, to catch it at the low or catch it at the high, right? Let it decide which way it wants to go. Not absolutely nothing wrong with that. For the upside, there is some resistance zones of note. That 47.90 area is going to be a little difficult to contend with. If we were to make that upside move, we'd still need to get through our own Globex high. I would definitely pay attention to yesterday's open and then yesterday's highest value. Beyond that, you've got the cog line at 48.11. Okay. And, keep in mind, yesterday we set new highs, right? Yeah. Yep. Sure did. Did it feel good? No, I don't think so. A move to the downside. We covered the up, so a move down. By the way, the ADR 1.2. It's getting smaller. So we're almost flat on the morning. We could easily make a 1% move, right? This is not even a half of a percent to cross yesterday's low. From our current location of -10, we'll just add 4 to that. There's a half of a percent. Now we can easily make that move. That's nothing. To get there, we would have to get through the VWAP. Um, there's an algo firm out there who uses the VWAP. Kind of interesting. They need to know when to turn off the algo, right? So suppose they're looking to sell. They'll wait until we get a fair amount of distance away from the VWAP, activate the sell program, and it will sell them back to VWAP, and then they shut it off. That's how they know they don't overdraw the market, right? Same thing if they want to buy, they wait until we get a fair distance away, they turn on the buy program, and they run it back to VWAP. Makes perfect sense, right? Because they're going to be held accountable. If Bob gets the phone call and he's told to get 10,000 contracts and he just runs out and buys 10,000 contracts, he could rock this market all the way up to the highs again. And then he's going to have to explain to his boss why he did that. And then that company is going to have to explain to the FCC if they come around, right? And the Federal Trade Commissions what a mess. So where do they know when to stop? How do they know not to push the market too far? They run it back to VWAP and stop, and then pause and let it drift back, and then do it again. And then pause and let it drift back and do it again. Look for that activity as we continue to flirt with the VWAP, right? And that's not the only thing that happens at VWAP. I had someone reach out the other day and say, I heard something else about VWAP. It's probably true, whatever you heard. This isn't the only thing out there. And keep in mind, when we talk about firms, there's a lot of firms. There's a lot of institutions that have different agendas. The COT report that comes out on Friday does a really good job of highlighting those differences, right? It's worth a read. If you don't know what I'm talking about, I made a video. It's on YouTube under Bullish Bears COT report, commitment of traders. All right, so that just about covers the ES. Got the NASDAQ presenting in this very beautiful failed flag. Now, a lot of people have reached out saying, I don't quite understand what you're talking about, failed flag. Well, in a regular flag, you get this beautiful trend, and then that trend pauses, and we get that pullback. Profit takers, consolidation, right? A lot of different reasons for that pullback, and that's a flag. And then the flag continues because a flag is a continuation pattern. But what happens if we don't actually continue to go, right, in the direction that the flag is implying that we're supposed to? Instead, what if it just starts basing and that base begins to get maybe a little wider because price aggregates, but we're still not continuing that move and we're just getting that wider aggregation or narrower, right? Because it could start to form a bear pennant instead of a bear flag. Either way, we're not continuing to move in the direction of the trend, right? The flag is failing to do what a flag does. So we call it a failed flag. And the play is to run it back up where it came from. Generally speaking, if you use the Fibonacci, the 786 100 forms the channel. And now it's not picture perfect, right? We're just talking about the width and the scope of the base. So you could argue that as long as we're within the base, the flag has not yet failed. It is just expected to fail because the base is getting wider and wider and bigger, right? It makes sense. Me too. I like trading that. So it makes sense, right? The failed flag has not yet failed, but we have the presentation of a failed flag setup. We're ready to go, right? There it is. You could enter on the lows, which is what I like to do when it gives me that chance, right? But I wasn't awake here. You know what I mean? Like I was sleeping. I missed that. So maybe we won't get another chance to get in on the lows. Or it comes down to the lows and then we get in and then it runs us over. That's happened to me a few times. So we end up taking a stop off the lows. It's okay, I'll try again. Right. And if you are uncomfortable trading that low, wait for it to break out of the top side. Let it come out of the top. Usually it'll deflect around that 70, give us a Busby, and then it'll start working its way back up. And you can look left and catch these pivot miners with the recognition that, okay, the next time we come into that pivot miner, we're very likely to get at least a soft rejection. And then, we run that thing back up to its previous levels. What it ends up eventually forming is a really big cup and handle, right? Or maybe not the handle, but definitely a cup. So that's on the deck. When you can tie it into something like an inverse head and shoulders or, something like that is even better. That's what we caught on ES yesterday, right? That's what we were talking about with that V bottom. Well, if you were on a smaller time frame, it wasn't just a V bottom. It was a failed flag with a head and shoulders. Yeah, you like it. We had originally thought that this was going to be our failed flag back here. And it started out that way. We had the Busby, the base, the bounce. I mean, everything was looking really good. It was a nice play. I was mobile at that point, so I had to play it on micros. I made 50 whole dollars in that on micros. Whatever. At least I was participating, even if it was on the mobile. I still came in later on and caught some of that. Let it play out. There's no reason to jump the gun. We know what the pattern is. We have the setup. You can kind of jump the gun if you can do it in a small enough size. So what I mean by that is a lot of us don't just trade futures. We trade options on futures. So suppose I'm already in there selling some puts down here, right? And as long as we hold above that, those puts are going to make me money. And then I go in and I trade futures against the puts that I've sold, right? Or the calls or whatever. You get the point. Um, and you can do some basis point trading and even some spread. So this is the March series. You could go in and you could be long March, short the next one, June, or vice versa, short March and long June, whatever. There's a spread there, right? See the difference? Yeah. That's another way to trade. You could also, like be long gold, short stock. That's what they call that, when you're looking at like stocks versus bonds. They just call the ES and the NASDAQ stock in that argument. Not necessarily saying that I agree with it. I'm just saying that's what they call it. Stocks versus bonds. They're really referring to the futures ES markets versus the futures bonds market. All right, so we mentioned the dollar sold off a little bit. It's not the movement up or down that's been the issue, right? It's the scope and depth of that movement that's been the issue. Same thing with the bonds. When bonds go down, interest rates go up. Banks have earnings coming up, and banks really like to make money on the money that they're loaning, and they make more of it when they can do it at a higher interest rate. So, um, this move down has seen finance doing really good. Don't expect that to last forever, right? I seen someone the other day doing a deep dive analysis on a bank stock. Like, that bank stock is the same bank stock that sucked last week. It's only doing good right now because the bonds are moving. If the bonds quit doing this, anything's going to happen to finance. Now, it is interesting to note we hit all-time highs yesterday, and the market is sitting at all-time highs still now, right? We're up there. Tech is bleeding like crazy. We've got corona rampant around the world. People aren't going to work. Shipping and chips and shortages. And why are we sitting at the highs? Because companies can still prove that they're making money, right? Even through all of this mess, they're still able to make money. Well, earnings season is just about to kick off. And it will start with the banks. And so as we come into February, this all-time high is going to be resolved one way or the other. Goldman Sachs and JP Morgan have stipulated that they're looking for this to resolve itself, right? They're calling for levels up here or levels down here. And it's nice to have, you can't be wrong then, right? Oh, I think we're going here or here. They kind of covered their butt, right? Either which way we go, they're going to say, see, I told you. I told you we were going to go down there. It's all going to be dependent on the earnings that are coming out. As we come into that earnings cycle, it's not going to be just about one single company. How did Netflix do? How did Disney do? How did the cruise lines do? It's not, that's not it. So for today, continue to do what JP Morgan had been talking about. Maybe no, it's Goldman, where they talked about um, think of the high inflation and the cost to make a product has gone up. If a company can pass that cost on to the customer, then that company is going to do good in a high environment, right? A high interest rate environment, high costs. It's not going to affect their bottom line because they're just going to pass that cost on to us. But what about those companies who can't do that, or their service companies, right? Um, so Goldman or JP Morgan, I can't remember which one, said focus on companies who can pass that cost on and who don't have uh, a massive workforce to deal with. That ought to give you some swing trade ideas. And if you go down the list of the companies that are doing good, just kind of keep in mind, those aspects. Got a little head fake from the Russell. Keep your eye on small caps. And the Dow bucked the whole system yesterday for a long time. It was kind of impressive. Everybody else was, falling like a brick in water, and the Dow just kept on chugging to the upside. It was really impressive, all the way up until it wasn't, right? And then it all just fell apart. Yeah, there was a lot of that this year. I try looking for end of year reviews on predictions of last year. Everybody that was stomping up and down, and I saw a lot of those if ors. Oh well, if things go good, we're running to the moon, and if things go bad, we're falling to the floor. Yeah, gee, you think it's going to be one of those? And then at the end of the year, they brag, "Yeah, we were right. See, you should listen to us. We totally nailed it." All right, so the VIX is kind of holding steady. It's important to recognize we're not in any kind of contango or backwardation, but the slope right now is important. The dollar is maintaining that range, and the bonds are holding at the moment. Now, the dollar opens at 8, and the bonds open at 8:20. So these are going to be your early warnings. They're your precursor to the day. They're a great heads up, just kind of like, oh, didn't see that coming. So keep your eye on those two today. Watch the clock. The clock is going to be a really big deal. Um, I had someone ask the other day, who is streaming? Um, I guess I didn't really think about it. For those of you who are not in our Bullish Bears community, you may not know who I am. So I am Signet. You can find me on the Bullish Bears in the Discord as Signet. It's a good question. Hadn't even thought to introduce myself because everybody in the Discord knows who I am. But we stream on the YouTube, and those of you in the YouTube world may not know that. So the sectors this morning, where are we at? Energy and energy are leading the way. Remember, 10:30 energy report. Finances behind that, building materials, healthcare, industrials. Then we start getting flat and into the negative. EEM is emerging markets. It's what I use to gauge the world or global activity. When the global market is bullish, we see in the green. When they are skittish or scared, we often see that flat or maybe slightly negative. A half of a percent 2 years ago would have meant a lot to me. I see a half of a percent now, and I'm like, so okay, we're slightly red, right? I even heard a 30-year veteran yesterday said, well, finance only moved like 1%. Only when finance would move 1% 2 years ago, is like, dang, we moved a long ways. And now, oh, well, we only moved 1%. He's right, though. I mean, I can't take it away from the guy. He was totally right. 1% really just doesn't have any impact now like it used to. Like, gee, you only moved 1%? Is that all? Airlines are getting punched in the face. No love there. Chips are really weak. You see, we're kind of split up there. I use a lot of the cloud ETFs and cloud names to gauge tech, because tech is just so broad, right? Where there's so many different avenues in tech. When we bring up TradingView, it does a good job of breaking that tech apart. Like yesterday, we were looking at healthcare technology, right? Not just plain old tech, but communications and cloud services, cloud power, those three, they're usually very large tech companies, and they're kind of a gauge for that tech talk. Well, tech has been really getting kicked, right? But bring up energy, it's also multiple paths when we talk about energy. And you can see for the most part, we're doing really good. When it does come to energy, try to think about what energy natural gas, coal, solar, exploration, production, what is it? Where is it? And is it one name or is it its peer group? On a day like this, when the sectors are mostly not giving it to us, these are the days where we are going to have to be stock pickers. We got to lean on our scanners. The scanner that I use is the high-low graph. I've made videos on that. You can find it on the Bullish Bears in the Discord. I actually believe it's pinned now, but if it's not, you can search for it. Just search up here. You can see I went to the ticker tape, which is Thinkorswim's publication. They wrote a really good article about the high-low graph. So I went there, got the link, published it, showed people where to find it so that you could learn about it. Because using a tool without understanding what the heck the tool is doing is just about worthless. But if you can read about it and then you know what you're using, you have a better understanding of what it could offer you. Then I made a video about it, and then I made a scanner that goes with it, right? And we're basically just taking Thinkorswim's default indicator watch list column, and we're showing only the best of it. The reason why is there are 600 names. If you just go to weekly options right there, companies that have weekly options, there's over 600 companies, ETFs, entities, products, things that have weeklies. If you do that, you're going to break Thinkorswim's watch list, and then it's going to tell you some kind of error, right? It's going to give you an error that says you're trying to look at too many things, and it won't let you do it. So we took that high-low graph, this thing right here. We took that, opened it up, stole the guts out of it, and built a scanner with it, and then eliminated anything below 90 because 90 and above is like the highest, and turned it into a scanner. Put it back into the watch list. That thing will give you nonstop day trades all day long. It's absolutely amazing. You don't have to go in and like do anything more. Just turn it on and it's nonstop all day. I have tried to make adjustments to it, kind of tweak the edges of it, but I don't think I did any good. I think it was fine just the way it was. So you can kind of fiddle with it, I guess, but I found that its default settings work just fine. So if we can't use our watch lists and we can't use the sectors, we're going to need to use our watch lists, right? These are the days that we really got to be our own stock pickers. When you're looking at the weekly list, try not to focus on one individual name. Look in that list in an aggregate way. Is it chips? Is it the EV market? What is it that you're looking at and what's its peers doing? You know, if I find something like Dick's Sporting Goods is doing good, I immediately want to go over and look at Target and Walmart and Costco. I want to look around at other companies that are like Dick's. The same thing if it's a chip name or, a credit card company. If I find one name doing good and I want to trade that name, one of the best things that I can look at to see if that name is going to continue to do good is to look at its peers. because I want to try to get the why behind it. Why is this thing moving? That way I got a better understanding of, well, how far can I actually get in there? We don't really get momentum plays in a sector that's moving, right? If the entire sector is going, like finance, it's really hard to try to get a day trade into momentum when it's all of finance. But if it's one single name that happens to be standing out and doing something extraordinary, you're looking at a plus 4% move with a lot of momentum behind it. That's a darn good day trade. That's what I got for you guys. Be careful, be safe. I will see you all in the live stream at 9 because it's my day, and I'll be streaming in there. Iron, I'll answer your question in the large cap stream since that's the place for questions. Y'all have a good one, and I'll see you guys there.